Hi, it's month 9 and we are ready to buy another stock. If you've been following along with us, you know that we buy a stock every month just to show you how we buy stocks over time so you can see that snowball effect take effect. This one was super hard because one, we're getting pretty diversified.
Yep.
So we didn't really want to get one that was already in a sector that we own. And two, we see some indicators of a recession coming on, which is going to play heck with whatever we buy.
We picked a stock, and usually we wait till the end of the video to tell people, hey, this is the one that we bought.
Let's just tell them.
This month we purchased
Fastenal,
yep. Of all the stocks that are out there, we've got a spreadsheet that talks about the different industry sectors that we've been looking at. It was tough. When you see a lot of economic headwinds, there's a lot of things out there that, a good example, one of the items on the list was ExxonMobil. This stock looked amazing. The numbers were all there, and then all of a sudden you go to the ticker symbol. And the stock, it's like to the moon, all the crypto people, to the moon.
And I think that was one that was at its historical high right now.
Right now.
So is it going to keep going up, or as this recession hits, is it going to take a nosedive? And then we're buying high and it's going down.
And it feels like I felt as a nerd in school, and everybody hosts this great party and they're all having a good time, and you show up and it's done. You're late. I actually personally have shares in ExxonMobil, and it's done incredibly well.
Right.
And same thing with Chevron. I own shares in Chevron, and that one has done incredibly well. But if for dividend dudes, for our portfolio, I feel like we're late to the party.
Yeah, and we want to go with something safe. We have a burden of trying to pick something that you guys can also invest in that you're not going to lose money on. And
long term, yeah.
We did a lot of looking and research to find something, and it's boring Fastenal, but man, if you need nuts and bolts,
they're the nuts and bolts of business, people.
Yeah.
Don't ever do that again. Do you hear me?
Just expressing myself.
No. Not like that, you're not. All right?
But they're safe, and if you track them over time, they do well.
Why buy Fastenal? Why would we do it? There's one of the ones we looked at was CTRA. It's an energy company. We already have an energy company though. CTRA looked pretty good until you got to the part where they were talking about hedge funds. What was actually happening behind the scenes with internal people at the company and hedge funds with the stock, and you see sell. It's like, why are they selling? Then you go into the investor sentiment and you look at all the bloggers. I guess we're video bloggers, but you look at all that. Everybody's super positive. They all think it's great. Why are all the executives selling and then everybody else just isn't seeing? So what are they not telling us?
What do the hedge fund managers and the VPs and CEO of the company actually hold the stock and they're selling? What do they know?
Right, and the financials looked okay. That was another one. See, this is the problem when you right about the time you get to the cusp of recession. Now, if you're curious about the recession, BlackRock Financial and the IMF, the central banks of the world, all the big talking heads are all talking about this giant recession coming in 2023. One of the big indicators of that is if you look at the foreign currency debt swaps that are going on, right now that totals 80 trillion. That's a big number, folks.
I mean, not a lot of people are talking about that, and we'll put a link in the description so you can go to that and read up on it, but it's incredible to read. It's scary.
BlackRock came out with this nice report on that, and there's a few other articles that talk about what's happening with it, but that's not the only thing that we're seeing. We're seeing consumer spending pulling back. We're seeing GDP flatline a little bit, and we're actually seeing some big corporations start to lay people off. Everything everybody was talking about is starting. So if we're looking at that, we had one of our subscribers talk to us about, hey, why aren't you buying REITs? Well, right now, the big word on the street is the housing market.
Oh yeah, there's Robinhood has come out to saying that housing collapse starting right now. Not coming, it's starting right now.
Yeah, talk to your real estate agent. They'll tell you.
Yeah. So to buy an REIT now, that depends on the housing prices and the building prices to be stable or go up so that when they sell, they get a profit. If those go down, you're going to lose.
That has a ripple effect. Now, is it going to be like 2008? Well, we don't know. The Fed is trying to mitigate inflation. Inflation has its own sets of problems, but as far as the housing market is concerned, Inflation affects those prices, but then we've got Fed raising rates, which affects the amount that you can take as a person buying a house. And if that goes up, we talked about this. There's a video, I think, Inflation Really, where we talked about what happens with this. That affects the stock market. If you're trying to buy a stock right now, the reason why we picked Fastenal is because we see a lot of these headwinds. They're not the best in terms of the numbers that you see. They're not the worst. They're towards the top. But you're looking at a company that is pretty safe in terms of
Right.
what they produce.
It's solid overall through decades of research and
Is it-
statistics.
Exciting? Like RIO, we bought it. We said it was like a 14% dividend. He says, no, it's about 10%. It went down to 10%. Now it's back up to 11.
11,
So
yeah.
same thing with Devon Energy Corp. That's an energy company. That one is exciting, big dividend, but a very volatile stock.
We're
So-
going to be looking at REITs and financial sector, and because we don't own any of those in our diversification system. Probably late next year.
Yeah, probably middle to late next year. And like I said, when we're looking at the recession that's coming up with the interest rates going up, the banks lending less. So there's a lot of headwinds. If real estate crashes, that affects construction, that affects banking industries, that affects a lot of things. I don't want to be investing in a company personally if I'm going to hold it long term in a storms and nasty network of market. I'd like to see something a little bit more understood and a little bit more stable. And that's the problem really with this month buying a stock, is that there's so many headwinds and there's so many storm clouds on the horizon. It's like, okay, which one is going to be okay? Just like just before 2008, all the financial numbers, they looked almost too good to be true. And the same thing, you look at all the energy companies, the oil sector and the energy sector right now is ridiculous.
It looks like a bubble. And normally when we see that, we would not buy anything. But since we said that we're going to buy one a month, every month, we have to buy something. So we wanted to go safe.
Yeah, and that's the intention here, is to diversify, protect your principal, and provide a passive income. And I think we're doing pretty good with that. The portfolio in itself has gone up 9% since its inception, and we get about 5% of that in dividends. So if you reinvest those dividends, we're about 15%. I'd say in a bear market, that's pretty good.
Pretty darn good.
Is it going to keep happening? Well, I don't know. Keep watching. We'll see how good we are.
Yeah. And thank you for all of you that have been watching. We just hit 200 subs, which was fabulous.
Yeah,
and we thank you guys for getting us to where we are. And we do this for you. So the more of you watch, the more we're going to be able to do this.
Yeah, thank you. 200 subs happened while we were talking about this video and how we were lamenting about how we don't have the time to be scripted and make it nice and polished for everybody. So those of you that have started out with us now, thank you. We really do appreciate it. We're going to keep trying at this and learning the video thing so you guys can see how to generate the passive income that we've developed.
$1,550 a month and $186 a year. Not bad.
Now, it doesn't seem like a lot. You look at that and you go, well, geez, I could buy one of these higher paying dividend stocks and I could make a lot of money. There's a word of caution for that. We've talked about it in past videos. Typically, the higher the dividend that gets paid, the lower the appreciation of principal that you get, and it's very unlikely that they can keep increasing that. Companies that don't pay a high dividend like Fastenal, they do tend to increase their dividend more consistently. So if you're getting $1 per month today, you might get $1.10 next year or something like that. That's another thing to think of. This is a slow burn, but it's a very effective one. And if you want to see what that looks like in one of our own personal portfolios, we did a video here that talks about what it looks like. And you can watch that video. It's a short video, so you can just see what that looks like over time. This is the foundation of a portfolio like that.
Right. And we've almost got our foundation laid. We're almost fully diversified to where we wanted to be. And then we could start taking those dividends and buying the riskier stocks like we've talked about in previous videos.
And when that comes, we're going to need some help with recommendations. So if you have something you want us to look at financially or otherwise, please do that. We'll take a look at it. I think we did a couple videos. Tesla, Zim, and JEPI was an ETF. We looked at that. There's a couple more on our list, but if you have something you want us to look at, please comment below and we'll take a look at it for you, and hopefully you'll find it valuable.
And even if you don't, comment an emoji or something that gives us engagement. And of course, subscribe. Like and subscribe.
Thank you for watching. Hopefully see you in the next video.
Thank you. And as always, happy investing.